Welcome back to Your Average Investor. Gap is at nearly all-time highs today. We're going to be analyzing what just happened with earnings and if it's a good time to buy in on a potential run-up to all-time highs or if we should stay away. Of course, this is not financial advice for you specifically. We're just giving our opinion on it. As always, hit that subscribe button if you haven't already to help us monetize this channel. Now, let's take a look at Gap. We want to look at the 10-year chart so we can see where things are at. Actually, it's not all-time highs. I misspoke. It's recent highs. They were much higher, significantly further back. So what we're going to do is we're going to add a nice price line here at the $30 mark, because if you look here, let me zoom in on this chart, you can see over the past several years, $30 has been a pretty significant support or resistance, more often than not resistance, for GPS Gap. And that happened once, twice, 3 times before finally breaking above for several months and then slowly selling off. 4 times resistance, broke above again for a couple months before coming back down, and then most recently didn't even quite make it to 30, stopped and stalled around the $28 mark after the last earnings report. Would you check that out? We have a very similar earnings report to what happened just recently. Beat on earnings, stock moves up for a couple of days before selling off over the next several days. To me, it looks like investors are trying to get out of GPS, institutional investors perhaps, by pumping the stock on news and then selling it off after. We have actually something happen quite similar. ANF, they pumped on earnings and then just had a big sell-off from $200 per share today down to $178 per share. It will be interesting to see if this sell-off continues, but back to GPS for now. So what's so exciting about GPS? Nothing really. They're a clothing company, and that's about all there is to it. They do pay a dividend, though, so that is kind of nice. If you want to be a dividend investor, you're getting about a 2.5% yield, and that's all they do is they just sell clothes. So not much to talk about there. Let's look at their insider buys and sells. Would you look at that? Full of insider selling. Not a single purchase recently. And these aren't the biggest sells, but they're decent size. Let's see if we can get rid of this guy over here. There we go. 2.5 million, 500K. Have another 2.5 million here. So interesting. Here we go. Wow, look at those. 22 million and 10 million sell back in December at $21 a share. This is just some guy who is a 10% owner, whoever John J. Fisher is. He raised himself some serious cash on those 2 sales. But other than that, we've got some insider that are selling just a little bit here and there. So personally, I would see if it stalls out at the $30 range, right? You can see here in the after hours, we're sitting at about $27, $28 again, which is actually right here. If we add a new price line at where this prior high was and then go back, you can see that right there. Big spike up, stalling out here. I think there's a good chance that there's a sell-off that happens soon after the dust settles. So personally, I may be looking to play Gap to the downside. Again, this is not financial advice. I'd suggest you do your own research and decide what you want to do for yourself. But I think the downside play is the play to go here. Yep, you can see here, right? There's earnings, pop, 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 and big sell-off. Little bit of a rally, big pop on earnings, and I think we're going to see a very similar trajectory to this as a sell-off. I'll probably play with some bear call spreads, or call credit spreads is another way to call that. So what I'll do is at market tomorrow, I'll probably look for something that's around the $30 range where I'll be selling call 30s and buying call 31s, making that difference in the spread. And then hoping that those positions just expire worthless and that I get to keep the credit. Again, I think this is going to happen very similar to what you saw with ANF today, where if you look at ANF yesterday, almost up to $200 a share, and then they continued just to sell off a little bit today. If ANF comes back up for a double top, I'll probably be looking for a similar position with ANF to look to play short, because this type of a rally, especially for a clothing company, I just don't think is sustainable, especially not in current environment. Especially when you see things like, who was it? CRM, right? CRM tanked down 20% at close today on earnings. Almost came down and touched the price line we talked about a couple days ago, or was it last night? This $110 mark. That's where I think things get really interesting for a rebound on CRM. But even now, I mean, this wouldn't be a bad position to enter, I don't think, if you're looking to invest in CRM long term. They seem to pretty reliably recover from dips. So I'd wait to see if something starts basing here, right? Like it's pretty common after a dip, then a base will eventually start forming that it starts bouncing off of. Maybe dips a little bit lower, but again, base forms, and then you can enter for some sort of swing to the upside. You can see a little base forming here, base forming there. So that's what I like to look for, is these support and resistance zones. Find where it starts basing and buy when it's basing, and wait for liftoff and then sell into the liftoff. Or on the opposite side, when it moves up, it starts basing at a, so potentially this 300 level is now a new resistance zone that if it bases up here again, I'll look to play to the downside. But that's all for today. Thanks for tuning in. We'll catch you next time. Have a great evening, everybody.